to this computer, yes. Right, good evening once again, and welcome to SB Cryptopedia. We're all about empowering, we're all about adding value, we're all about, creativity and learning on how we can make money into the crypto space or into the trading space. So tonight we are going to cover the topic of how to take profit. That's proper English, right? Okay, so guys, I was saying taking profit, it is a skill, to be honest, from experience as well. A lot of us, I'm sure those that have already been involved with their portfolios, you'll agree with me that you have seen your portfolios growing. They grow to a certain point. And then when they get to a certain point, you are still wanting the profits, the portfolio to get to a certain number, or let me say number, a figure. Yeah, for example, you started with $100, 1,000 Rand, and your 1,000 Rand goes to 5,000 Rand, and you'll be like, can it go to 10,000 Rand? Because obviously you are calculating based on the wants and the needs. And I always say, thank you. And I always say sometimes we make this decision based on an empty stomach. So if you're making a decision on an empty stomach, those decisions half the time they're not as viable as possible. So tonight I want us to understand it, or to grill it to ourselves, to say we have to take profit, leaders. We have to, it's a must actually. If we have all pay attention to the market, there's no way the market goes in a straight line. So one or the other, the market will give you a leg up, and then it's either it breathes. So we agree that it's an uptrend or a downtrend or a sideways trend. So if it gives you an uptrend, one or the other, it's not going to be an uptrend until the kingdom come. No, it will definitely breathe, whether it gives you a sideways, but most of the time it hinges down. And when it hinges down, it then consolidates, meaning that the people that had taken out profits, now they want to deploy, they're looking at their buying opportunity, demand zone. So you have to take profits. No matter what, we long-term holder at some point. What you need to do, you can just be calculative to say, if I started with $100, I bought, let's just give an example here. Maybe you started with $100 and then you bought 100 assets, for example. And then when you bought 100 assets, then what you're gonna then do, you decide, let me see. Okay, last time we looked at Solana, let's look at Solana again. Let's trade Solana. So you decide that, okay, you bought $100 and one Solana was $10, and you bought 10 Solanos rather. So if the 10 Solanas that you bought at $100, you then gonna decide to say, as much as you might be a long-term holder, holding with your dear life, you can then say, okay, if my Solana give me another 50% or 100%, I'm looking at banking a certain amount of profit. So meaning that you are not saying that you're taking the whole, you're selling all your position of Solana. You can also sell your old position of Solana if, for example, when we were analyzing Solana the last time, we saw that it really moved in a very long uptrend of about, we got about 20, was it 20,000 percent, I think. Let's just look at Solana here. So if it does give you that, you can take profit, but it's an individual decision that I can't tell you to say, do it. Also going with your trading strategy, your risk management, your plan to say, what type of a trader are you? What are you looking at? So let's look at Solana today. Where are we sitting with Solana? Am I right? Yeah. So we're sitting at about 122, right? And then if we look at where Solana is coming from, or we say, maybe we can take it from here, even this is 19 July. The price was about $23. Okay, so someone that even bought here at particular price, this person is still in profit, so to say. Now it depends with you. What I'm basically saying is that there's no, I don't know, kingdom come, something like that. So what you can do, you can then decide to say, all right, out of my 50 Solanos that I bought, maybe you bought 50 Solano, let's say 50 Sol, maybe at that $20 price, that means you spent what? That's gonna be R1,000, right? $1,000. I put it that way. Incorrect. If it's wrong, math, guys, is not my thing. So now you can decide to say, because there's two ways about it. What you need to understand is that, let's say you exit all your Solana position right now at maybe you exited at $200, and we've seen Solana going under $100 at about $90, $80. The chances of you getting your position, that's if you really entered at a lower position of maybe $26 that we say, the chances of you getting that particular amount, they are very minimum, depending on the type of asset that you have bought. Like, for example, we know that Solana's are layer ones. So those are the ones that you can see that they've got so much traction in terms of the market, and they've got so much growth. So what you can then do, so that you can also be safe, the reason why we need to bank some profit is to make sure that you take out the emotions into your portfolio as well. Again, like I said, going with your trading plan or your trading strategies. So at this particular time, you might decide to say, if I've got 50 Solanos, I want to then decide to say, if my Solano that I bought at $20, if it goes to $100, you have made 4x or 5x of your money. So if you put $1,000, I think you're sitting at $5,000. It wouldn't kill you to then say, let me just sell my initial position, which is $1,000. So you're taking out your initial capital, if I can put it that way. You're taking out the money that you started with. I don't know how much is this going to be if you're selling at $200, right? So the price of one Solano is $200. So that means you might sell just 5, right? Yeah, you're only selling 5. So it's up to you, want to sell 5 or 10. So meaning you're taking 5% or 10%, it's individually up to you. And the reason why you need to free up some cash here is so that you can be able to be in a position to identify other opportunities that might arise within the market, because it's not going to be only Solano. And also, you don't want to have all your eggs in one basket. Just in case something, guys, anything can happen in life. So just in case something happens, you don't want to say everything is gone. If Solano reverses back to $20, it happened. Like, I was looking at the chart of ADA, as much as I love ADA so dearly. Guys, again, we are just investors into the market. We are not partners, neither founders. Even the founders, they get to a point whereby they take their profits. You know what I mean? So you don't have to dearly love an asset and be like, this one, I want it to be Bitcoin and all those things. That is someone who's just blinded. Remember what we spoke about? We say that there's smart money in the market and there's dumb money. So if someone's saying until, that's like dump money, because even if we look at the chart of Bitcoin, you understand what I'm saying here, to say, if you manage to then, remember on our portfolio, there's a day where I showed you something like, to say you have your 10x gems or your degen gems, the coins that you buy, and you know that this one is high risky, but I've identified a demand or an opportunity into this particular asset, and I see that it can give me quickly 50% or 100%. Those ones that you want, that you really sell, when they give you that particular profit that you want, sell. That sell button, guys, is there to be clicked. And for you to sell, you are selling to someone who doesn't know that they're buying at the top. So by you selling, you are literally saying, okay, I have analyzed and I've seen one or the other. If the market gives you a leg up, you just need to calculate. If, let's say, maybe you are analyzing on a day time frame or an hour time frame, it doesn't matter what you're analyzing on. Then you can be able to see that, okay, especially from here we're in a day time frame. If we can check how many days, it's even months. This is 21 of July, up to, wow, guys, up to 10 of September. Solana has been just hitting the higher highs. It's been profit. There is no way it's gonna just continue and continue and continue. Thereby, and if you can look here, it went to the highs of, let's see where it went here. Okay, I need to take this out. It went to, I think this was the highest. What was our highest? Okay, 262, fair enough. It went to 262, which is our highest. I hope you guys can see that. Let me just put that. So in here, the 262 or 263, this was our highest. But even if you had taken profit here at 200, you are better off than someone who is right now sitting with Solana at $121, because already we're in a downtrend, and also based on the cycles of the market, we might be hitting a bear market as much as we're going to see. So it's not gonna go down. It goes down like here. It went down. It has been on a downtrend. It just gave us some bit of hope here, and we're hoping that, wow, this one this one can be an uptrend, or it's a consolidation. I don't know, but you are better off safe with some cash within your trade, within your portfolio, so that when there's an opportunity, well, I don't know if it can retrace up to here, but when I was looking at Cardano, it can give us the prices of 2019 or 2020. I was just analyzing the chart and just looking at the fundamentals. And this is based on Cardano. It's affected by the fundamentals, because everything that they promised is nothing is coming to fruition. So by that, the investors are just hitting sell button. So you can just decide, it's up to you, but you have to take profit. So how do you take profit now? If we were to look at our Binance here, so it doesn't allow you, I think, is Bridget here already? So I think Bridget had asked us a question to say, how do you put the stop loss and the take profit? So within the spot wallet, so you can see here I'm on the spot wallet. So for you to go on the spot wallet, you just come click here on your wallet. So Binance doesn't allow us on the spot wallet to trade to put the stop loss and the take profit simultaneously, unless if you're doing futures. So and here on Binance South Africa, futures has been suspended. If we are to look at futures, we're going to look at other platforms like Bybit or KuCoin or Gatio, you know. But let's just say here we're trading on a spot wallet. Okay. Let me just look at Phantom again, or whatever, Solana. Right, this one give me BSD. Let me look at the pair with with USDT maybe. Okay, so it BSD, it be buzzed, but maybe it's buzzed. It's also a stable coin that you can move your money to if maybe you're getting out. So in this case, if I'm taking my profit, I am simply saying that I am getting out of my AWIF position and go to USDT. But how do I do that? Strategically, I have to make sure that with the analysis that I would have done with the fundamentals, but some of the things you can just see, like I've said, if you see that a particular asset is giving you so much profit, it can only be wise for you to look at, to say, let me just bank some money, such that when there's another opportunity, there's a reverse, because it's going to definitely give you that reversal. If we can look here, this is AWIF. This is 2022. Okay, if you can look at here, I don't know how to use this platform anyway. Where's our trading? Where's our, well, I'm not seeing the tools, guys, here. Okay, anyway, you can look here. So if we can look at AWIF, at this particular leg, what I'm saying, that you're always going to see the legs up. So if you're a swing trader, we spoke about you identifying those demand to say, all right, it has come down here. Maybe you also look at the breakouts using your moving averages or the candlestick patterns to say, is it an engulfing candle? Is it a hammer? Is it a morning star or evening star? So depending on which trend, what is very important is that you need to identify the trend. Is this the market going up? Yes, do you have questions? Are you guys saying something? Okay. All right. Okay. So if you can, if we can just have a look here, you see that here to here, it was an uptrend. It's kind of a leg up. Let me just see. I'm looking at a 4-hour, meaning that probably this has been at 4, 8, 12, 16, 24. This is about maybe 2 days or 3 days of an uptrend. If you are that type of, if this is the money that you want to play around and make some profits, it's okay, guys. You can take your $100 or $200 so that you can practice and make sure that, okay, am I able to identify to say in this particular time, the market has gone down 1, it touched 2. Then if it comes the 3rd time here, then this is where you're looking at to say, all right, what is the next candle opening? If you had, obviously it has given you 3 signals on a downtrend. This is a W. Those that have heard of trading a W or head and shoulder or inverse head and shoulder, then you know that this is 1. Normally, remember we're looking at the back. So it gave you the market structure, which is our resistance here. So we say 1 here. I don't know why the tools with, oh, there are the tools. These are drawing. Right. Let me just take this. So it gives us this support here. You see, it gives us the support. We can put the lower lows here. So that's 1, that's 2. And then the 3rd time, remember, if it gives you 2 touches on the area of value or the demand, where there's demand. So in the demand, it's either it's your resistance or it's your support or it's your moving average. So if it gives you 2 touches, the 3rd touch, you are paying attention to it to say, if it has gone down, it went up, it came back again and tested. Guys, this is just so simple. Like, it's just a pattern. And then now you're looking at to say, let it come down. Now, if it touches, it didn't really touch, but you can see it's not really far from your trend line, from your support. Now, what you are paying attention to say it doesn't break it, because if it breaks it, that means it's going to go further down. But for the 3rd time, if it touches again and come up, that means you have an up leg. So even if you are doing your swing trading, you are able to say, all right, this is a position from here. All right, this is an uptrend from here to there. You know, you'd have then identify a trade here. You'd have come in and bought here. And then if we look at this, all right, some of the tools, I don't see them here. I wanted to roll. I wanted to, that's nice. Okay, let me just take this triangle. So if you look at this, anyway, this one is not going to give us percentage. So what did we get here? We entered the $29 up to about $42. Maybe this could be a good 20-30% that you'd have met within a space of 2 days or 3 days, if I'm not mistaken. Actually, it's here. So you just have to come here. So the other technique that you need to pay attention to, leaders, is that when you are doing your swing trading like this one, especially if you are trading these W's or the inverse head and shoulder, you need to be mindful of saying, if the market gives you a leg up, so you also need to be cautious about to say, when can the sellers come in? Remember, these are the buyers, they are pushing the prices going up. You want to take your profits before the sellers, because there are people that are trading futures. We call them leverages. So they're the people that sit down and and short the market, and you find out that they just want to liquidate, or if you look at the order book here, those are the people that can make the market move, people that really put very good orders. So far here, there's nothing massive here. So being smart and not being slammed into the market or racket, what you need to make sure is that if it gives you an up leg, then you are looking, remember, you always analyze from your left hand side. So basically what you need to then pay attention to is to say, what can be the selling pressure? When can the selling pressure come in here? Meaning that the people that wants to push the market down, when can they come in? And then you have to look at those things. So if we look at it from here, I am seeing something like there. Let's see what it's going to give us. Okay, we're analyzing this together, so I don't know. I really can't. So that could be the next high. Let's see if we are going there. All right. So I think it was okay. It's too high. This one is too high. Yeah. All right. Maybe if for me to give you this illustration of what I'm trying to tell you, so that you can be able to not really time the market, but you need to just make sure that you want to get out of the market before there's a lot of pressure that comes in. Okay, I went far. I think we should come here. Yeah, we should come here. So I'm just looking at the candle to say where is the resistance, because remember we're taking it from the support. So basically what we're paying attention to is to say where can be the next resistance. So the next resistance can be here. So this can be the resistance, meaning that if it comes down, they touch it 3 times. If it's going up, it's either it breaks here. If it breaks here, it can go up higher, or it's just gonna test. So it's this candle break up there, but also pay attention to the candle patterns. And then it shows that it tried to go up. So the buyers tried to push the price up, but the sellers came in. So if you're taking this particular trade from here, yeah, from here, let's say from here, what you'd have then been smart is you don't want to be there at the top. So you want to try and take your profit before the sellers come in. So meaning that you just take your higher high. So the week of the candle, this is where the higher price of that day, even if it didn't stay, but it showed you there. So basically you would have taken your profits here. Need another horizontal. So you'd have taken your profit here when this candle closed here. That means you'd have taken your profit at about $38. You'd have entered the trade at $28. So you'd have made good $10 per whatever you have made in, you have put in of the amount. If it was $100, then you'd multiply with whatever amount. Because now the danger is to say, if you wanted to take the top of the market, it then means that you would have tried to take your profit here. So you'd have tried to take your profit here. This is you timing the market, right? So you are timing your market here, okay? And then you say, I want to take my profit there. But already you want to get out of the market before the opposing pressure. You are just leaving a room for yourself to be safe rather than to be sorry, to say, I want to see when the market is coming down, because when it starts coming down, it comes down very, very fast and you won't be able to see what happened. So now that probably you'd have looked at this trade and analyze it. You don't want to be looking at the charts day in, day out and say, okay, was it reached there every 4 hours if you're analyzing the 4 hour candlesticks? But what you can then do, you come here, you'd have already bought your asset, for example. Let's say I've got my 10-hour here. And then I bought it, we agreed. Remember, for you to enter a trade, you need to enter a trade with a strategy, with a structure or a strategy or a plan. Don't just go to a trade without you having a plan. So you need to identify your entry point, your demand area, your area of value. And then you also need to decide to say, where am I going to take my profit? And then we're going to look at to say, where do we want to put a stop loss? And then now I'll just explain to you to say, what is the stop loss and why the stop loss is important. So what you then do here, you need to come and say, my stop limit. You come and click on the stop limit. So basically you are saying that I want to put, all right, so now that means we need to look at our stop losses here. So maybe let's say, okay, I'm just going to demonstrate on TradingView the other tool that I'm just using, I've identified that is working. Let's say now this market, you are coming at the bottom, you're buying there, and then you are saying you want to go up. So now the risk will be to say, what if this market reverses, comes back against me? How much am I willing to lose? Without even doing calculation, let's just do that common sense to say, you are saying that I am putting $100 here and I'm anticipating my $100 to give me $150. But now you want to be safe. You don't want to work with the what if. So you are saying, how can I be protected if this market turns? Because the market can do anything, guys. There is no such thing as say definitely or guarantee. Like we discussed when we're doing our analysis, is to say, sometimes you'd have read the market and put the candlesticks, the pattern, the moving average, all the tools, we put them together and they tell you that yes, definitely, if the market has touched 3 times your area of value, see 1, 2, 3. Now you show that okay, it is a breakout, then it should go up. But this can be just erased by one Twitter or just one news from CNBC, so such things. So what, for you to be safe, you then need to decide to say, if I'm putting $100 on my trade, which is I'm going up, I am buying, it's going up. What is going to be my risky, or what am I losing, my risk reward, to say, I am willing to say, if this trade now doesn't go the way I've analyzed it, how much am I willing to lose? I hope that makes sense. So you can just put that particular percentage to say, if I bought at $28, then what am I willing to lose? Then you can just literally look at your chart and try and identify your other lower lows in this particular instance to say, okay, if it reverses down, where can it go? All right. So if we are here and then you're looking at to say, if it comes down, it might come down to $34. This might be a bit lower for you again. I don't know. So maybe you can then just decide to say, okay, if it hits here, if it reverses, it shouldn't hit. So if it has gone up, remember it has gone up with you. So you don't want to lose all your money back, because if you don't take it, you're going to lose it back. So you can then decide to say, am I willing to say, let me lose $34 maybe. Is it blue? Okay, let's use paper maybe for this one, for the stop loss. So you can then say, okay, if it I bought at $28, and then if it rides all the way to $38, if it comes down, I don't want to lose all my money that I had profited from $28 to $38. If it comes down, can I just be stopped at $34 if you are putting that? Yeah, this is $34. Then this is your stop loss. So that's kind of a common sense, that I'm going to show you another tool that you can just use to say, all right, this is what I'm looking at. So when you come here on your Binance, I'm believing that Binance, most of the centralized exchanges, they're just the same. This feature is not there on Altcoin Trader. Don't know, I've never seen it on Altcoin Trader. So you are saying that you want to be stopped at $34.20 for argument's sake, or $34. It doesn't allow me to put the zeros. $34.20. Obviously you'd have bought, we're saying maybe you'd have bought $28, right? Okay, probably it's not going to allow me because of the price, right? Let me see. Let's keep that $40. and then your amount of, so now you are saying that this is the stop loss, to saying that if the price goes against you, you just want to sell. Oh, wait, I'm putting it the wrong side. Okay, so your selling side, already you'd have bought, this is the buy option, you are buying. You'd have bought your assets, you come into the market, you buy your assets. Now you are saying that I'm anticipating that this particular trade is gonna move from this particular price to this particular price. So now you are just coming to say my stop loss, if maybe I bought at $40 or whatsoever price, and you're anticipating that it's going to go to $60, but you want to say if the trade comes against you, you rather lose maybe $2 or $3. So then you're going to say my stop loss is $37, like that, right? And then here you decide to say, how much do you want to be stopped? How many of your assets? So you want to be stopped 50% of your assets, or you want to be stopped 100% of your assets? Then if you want to be stopped 100% of your assets, you're just gonna click your sell button here. So it's gonna ask you here, you want to say your stop loss. So if you bought an asset at $40, and should it go against you, because when you bought at $40, you anticipating with this asset is going to go to $50, $60. But if the market goes reverse now from what you have analyzed or calculated, now you're just saying, can I lose $3 of one asset or $2? But also, when you're doing that, you just need to be mindful of being realistic. Like we're going to look at the stop loss tool that I'm going to share with you. It's going to then give you that idea of saying, yes, you should put your stop loss at this particular price, because also with the stop losses. So if I confirm here, this order is going to be set and it's going to sell at $37 if the market, so let me just confirm. So if the market comes against me, that means I am selling 10 of my IWIFs at $37. That's my stop limit. But I'm saying that if the trade goes up, then it's fine. I'm gonna ride with the trade and go all the way up. Okay, so this is your orders here. You can just see your orders here that have been open, your order history, your trade history as well. You can see all those things there. All right, leaders. Okay, so basically this is how you put your stop loss and you take. So if you want to take your profit again, so if you put the market is you saying, I am selling at whatever price. Let's say right now when I sell my IWIFs, I'm just going to say market. If I want to sell at this particular price, I'm just going to say market and then say put 100%, or I'm selling, and then put 100%, then click on sell. It's going to sell with the market price, which is there. But if I'm saying that, no, I know that this particular asset is going to go, it has got a potential of, let's just delete there. It has got a potential of probably going to its higher highs, which is about $54. Then I am saying that I want to put my take profit, or even $69. It goes all the way up there, guys. Yeah. Then I come at limit. And then I am saying that I want to sell not at $40, but I want to sell at $60. And then how much do I want to sell at $50? $60. I want to sell 50% of my profit. Why am I using the wrong button? All right, selling, guys, is this side, right? So we're saying $60. All right. And then I am saying I want to sell 50% at $60. That means if it hits $60, so I'm putting my sell orders and I'm not there. $60, it's going to sell 50%. That means it's going to sell 5 of my IWIFs. And then I'm still left with 5. Now I'm deciding again to say, all right, but you don't just thumbnail this information, as you come and analyze with your charts here. And then I'm saying that, okay, my next take profit, I want to sell if it gets to $75. Or $75.50 whatsoever, and I'm selling 25%. You see, then I click on sell. And then now I am also deciding to say My last position, I want to sell at, if you have seen, remember you also want to be trading. That means you want to get out of your entire position. Then I'm selling, I'm putting 100%. That means whatever I have here, and then I sell. So there I am having my orders. Even if I go away for whatever time frame. Now, if AWIV gets to $60, it's going to sell 50% of my position. That means it's going to convert AWIV to US dollars. We know that USDT is a stable coin, right? And then if it gets to $75, I am selling 25%. And then the last position that I want to take at $75. Am I right? Or $100? What did we say? $100. Yeah. So I'm selling at $100. So basically, here you have just put on your trail stop loss. Okay. I'm not even seeing my Zoom. Mamda. Yes.
Yes. No, you can just finish up this one, and then and ask my I'll say my word.
Okay, cool. Yeah, basically this is how we trail our stop loss. So if they're saying not stop loss, trail take profit. So you are taking profit. Like we say, if you really want to take profit, this is how you're going to take profit. Yes, ma'am.
Okay, thank you very much, Mel, about this information. It is so true that you're saying taking profit is actually very essential. From experience, guys. Yeah, it's the end. Yeah, from experience, I know, like last year, I think it was November, there was a coin that did so well that it gave me like, I think it gave me 100x. And because of lack of experience and lack of, okay, not lack as such, but little knowledge, you look at the market and you say, ish, it's given me 100x. Maybe it's still gonna go to 150x. You understand what I'm saying? And you look at the market and say, let me give it some time. And someone have just said once upon a time, he said, guys, the market is not anybody's friend. So do not marry the market. This is what I did, on that particular coin in November. I married the market and said, now it went down to its original price that I bought it at. So those mistakes, it's true, we make them because of lack of knowledge or little knowledge, but we're really learning a lot from you. Thank you.
Like I said, I'm talking from experience. What you're saying, Mamdaba, is true. And for whatever reason, guys, now I don't know. I think I'm still digging deeper within the market space to say, is there some form of things that they do, witchcrafting to witchcraft our minds? Because you see your money, like literally, Nina, I will give you an example of Cardano. I think I'd put how much, 20 or 30K? That moved all the way to 500K in my eyes. I think this was around, was this November, October, somewhere there, or even back then. It was a little bit back. I just didn't take profit there. And when I was looking at the chart, I could see, no, this market is just overbought. People buying Cardano. I mean, from 30K to 500K. Can you imagine how much that? And whatever reason, fear kicks in, greed kicks in, witchcraft kicks in. Now when I blame it to witchcraft, you know what I mean? Witchcraft kicks in. And I'm thinking, should I sell? Should I not? I just sold for like 150,000. And I said, no, the other one is going to go to $10. Because also what happened, guys, really, I think I've learned it hard way to say the influencers, I think these people, they I don't know, they are bored or something, because you'll find them already hyping that particular asset to say, will Cardano hit $100? Will Cardano hit $20? And there I'm sitting looking at my laptop and my portfolio. I'm like, what if I sell it $3 and it goes, I go to $20? I'm losing $17 already. So it just definitely just happens like that. So I don't know, but I wish I had someone who's just going to give me that confidence to say sell and have that experience, or have that someone that coaches or mentors you. Then maybe I would have done it better. But I just, when I then took that money, that's what I took at that highest peak. But the rest of the money now started shrinking and shrinking. And once it starts shrinking, well, with me, I don't know with other people, I'll just say, okay, whatever, even if it goes to zero. I think it is a flu. Whatever, I'm not going to exit because I've seen the money, but now I didn't take that particular profit. So it does happen. That's why I'm saying we never going to massage the market, guys. Let's not. We're here to make money. If a position gives you money, they're very, very likely to say, especially now, if we are hitting the base cycle, we might see those original prices that people bought at 2019 or 2017, or it happens like that. So that's what I'm saying, that at least make sure that you trail your taking profit to say, if it gives me this particular percentage, and what's going to save us is to have your spreadsheet or your journal, where before you put your money, write it down to say, if I'm buying assets of so much money, if it gets to this particular price, I am, be satisfied, be content. Don't be greedy, because what kicks in is the greedy to say, now what I was calculating, I was like, I'm exiting my card, I know profited 1 million. That's where I ate. But when I started at 20,000, I was like, if it can just give me 200,000 or 100,000, I'm happy. Now it gave me 500,000. Instead of me taking profits, what did I do? I started raising, because I'd never had any structure whatsoever. And it feels so good when you're looking into your portfolio and you're seeing your portfolio is just so fat. But I promise you guys, overnight, it just triples. Another asset that I bought was EBTT on Altcoin Trader when it was listed. I bought close to 1 million of those ones, and I spent like 2,500 Rand, 2,500 Rand. I'm not even lying. And during that first peak, I think it was March, April, May, somewhere there, beginning of 2021, first quarter of 2021, BTT went from 2,500 Rand. It gave me 80,000 Rand from 2,500 Rand. Guess what I did? Guys, this is real. Okay. But I hope you're learning.
Oh, shame.
I hope we're learning, because I was just discussing with Obredo to say, I think the other thing why I am so excited about having these classes is not about people saying, oh, someone to charge money. It also makes it real for me. I'm responsible for other people that I'm telling them to say, guys, let's do this. And it will just give me that edge of taking profit, because the things that I'm talking about, I've been a victim of them big time, whereby I wish this would have been that, or this would have been that. So one or the other leaders, if you get to see the profit, like I'm saying, if you see this kind of a leg, so what you do, you can look at your daily time frame, and you can just look at your weekly time frame as well. So even if we look at this particular Isolano at a weekly time frame, we can see that there was huge movement. And also what is very, very important is that you don't want to exit the market too early as well, right? So it's going to help you to have your trading plan, your trading strategy. And your trading strategy is not the trading strategy that you just sleep and wake up and say, this is my trading strategy. It's based on you start from the tokenomics, guys, very important. Start from there, from you picking up a coin. Why are you picking up that coin? If it's a coin that you just want to play with and you see that there's an opportunity, go ahead, just so you know that you are just playing with that coin. And even if you are hearing a coin from social media, come and try and put on your analysis and say, okay, what is it that am I looking at? So if we look at it here on a weekly time frame, it really shows us that it has moved. So sometimes you're not going to say 100%, I'm taking the top, because this 100% taking the top, that's what bends our fingers. But at least just be reasonable to say, if it gets to this particular percentage, at least take out your initial capital to start with, your initial capital, so that you are having some bit of cash, so that actually, guys, on a trading strategy on your portfolio, you shouldn't be zero cash at whatever cost, even if the market is on a bull run, making sure that you've got some reserve of cash if you are really a proper investor or trader, because one way or the other, in a week, you find out that there's those buying opportunities. Then it makes you a better trader. You are able to buy, you are able to sell. And for us to make millions with the market, the only strategy that we should really look at, I think, is that one. So basically, if it gives you that, you just know that one or the other. See, even if we look at it on a monthly time frame, this particular asset went up, but the people started to buy at $200. Oh, let me just maybe take it in a row. Because if you started buying at $200, now we are all praying the different prayers that I said we shouldn't pray those prayers, right? Yeah, wow, 17,200%, all those things on a month. And this would have given you a lot of time to take profit. Really, really, it has given us a lot of time to take profit. So if you don't take profit, you are just, well, I don't know. Okay, let's look at taking a stop loss, guys. So remember, when you are putting up your trading plan or you're doing your analysis, you need to play around with from your fundamentals. You also come with the tools. Remember, we spoke about our moving average, we spoke about our support and resistance. That is very, very important. So it depends on, you can just look on all of them. Maybe if the market is going up or going down, if you just have a look. So it can show you that now it's going to go down, now it's going up, or something like that. So you don't have to really spend a lot of time just checking at the markets and all those things. Maybe let's just have a look at Bitcoin, for example, to start with. So normally it's always good to just have a look, even if you're not investing into Bitcoin, but just have a look at Bitcoin, because Bitcoin in overall, when you wake up, I think if I'm going to prepare that tomorrow, some of the indicators that when I wake up in the morning, what do I look at in the market for me to then decide to say, where is the direction of the market? So remember what we spoke about is to say, when you are trading, very, very important, before you come into the market, you look at the trend of the market. So you need to identify the trend of the market, right? What is the trend? Let's say maybe you're analyzing from here to there. Then you need to be able to see, is it a downtrend? Is it an uptrend? Is it a sideways? And obviously, if it's a sideways market, I don't think that we have got a trade there. So if the market is breathing, sideways is basically the market saying, can I breathe? Can I take a break? I'm tired. I've been rallying and rallying. Like here, it rallied, then boom, it gave us what? It gave us some breathing here. You can see this is breathing here. You know, this is breathing here. So if it breathes here, then what you're doing as a trader, you are looking at to say, okay, if it breathes, it has been going up on an uptrend. Now you are now identifying your area of demand to say, is it going to continue going up or is it going to reverse? What is going to happen? You sit on the side and you look at the breakouts, what we call the breakouts. Okay, so we look at the trend. All right. I don't know where we wrote. Maybe let's write here. So we're saying our trend is in. So we identify the trend. If we're to look at from here to here, we will agree that this is an uptrend. All right. The market just wants us to be very playful or artistic. So we're saying it's an uptrend, right? We identify, you need to identify, this is you doing this on your own to say, if you're looking at the trend, this is an uptrend probably, all right? And then now the next thing that you need to look at is to say, where is the demand of the market? So to say, so let's look at some people, they call it the structure of the market, or in simple terms, it's just to say, where is the demand of the market or the structure of the market? So in this particular case, so when you're looking at the structure of the market, you are basically looking at your support and resistance. Maybe you're looking at, maybe let's just put the indicator in this particular instance. Let's put our moving average. Let's put it at 50. I don't know if this is going to work. So 20 moving average, 50, or 5 moving average. So moving average, guys, is to say, yeah, so this works, right? So you are saying that it can work as a support or resistance. So if the market is trading or it's going above the 50 MAA, the 50 moving average, in this particular case, this is what can work out like your support, or it's an uptrend and you're saying that, all right, is it still within my trend line? It can be the same thing, right, leaders? So that can be your trend line there. See what I mean? So still you are looking at those touches, you are identifying the area of demand, or if it gives you those W's that other people look at, it's entirely up to an individual to say, what is it that I want to look at? But all the same, head and shoulder, WM, if the market is going up like this one, you know that you are looking at buy areas. So if you look at that, let's say maybe you are trading your moving average. Let me just take out this one. If you're looking at your moving average, as long as the market, you're seeing that this market is on an uptrend, and you are saying that wherever you'd have entered the market, very, very important, you get the confirmation or the breakout. They say you come in here, and then as long as it hasn't broke your moving average, in this case, you are probably having the guideline of the moving average. Now, as long as the market is still going above your 50 MA, now you know that you are still on an uptrend until it breaks. So if it breaks your moving average, as you can see here, you have moved it from here all the way up to there. Maybe here you would have said, okay, what is happening? And then it goes up there. It didn't break your movie, your 50 MA, your moving average. It only broke it here. So this is where, if you are trading and then you are looking at, to say you are riding the market, you are looking at the taking profit. So if it breaks there, then you are now looking at, to say it has broke, what can be my next support? Because now it shows that the market is changing the trend, or it's giving you, now it has been on an uptrend, now it's giving you the signal that it's going to go on a downtrend. So at this particular case, you don't have to panic, or you don't have to do things in a haste. What you need to do, as long as it breaks here, then you can start taking your profits from here, or even if you take your profit from here, remember you've been riding your trade from as far as here. So even if you take your profit here, you wouldn't have made a loss. You would have still make some profits there. You say you decide, then you say, I'm taking my profit here because it has broken. See, it broke your 50 moving average. It tried to went up, the buyers tried to push it up. It still broke it here, and you'll be like, okay, here I am taking my profits. So you can start taking your profit, so that now eventually the market starts going down. You see, the market starts going down. So you would have probably saved your profit. Like we said, the reason why we're putting up the technical analysis is to say you are being an active trader, not on a swing, on a scalper or swing trader, not to say you just have to say every day you are waking up, you are looking at the markets, not really that, but you are literally having an idea of saying, okay, if it's here, there's a potential that the market, see, it broke here, it just started going down. So if it broke here, and then what you'd have done as someone who's got some knowledge right now is to say, if it broke my 50 MA, then what can be the next support? Then now you come and put your support there. So if it broke there and you start probably taking your profit there, or you can even start taking your profit here. See? Now you start banking your profit here. You would have saved yourself, right? So it would have gone down already when I have banked your profit. See, when it went down, it went as far as almost where you started. Let's see, where did we start? Oh, we started there. Okay. I don't know if this is the same chart, right? Yeah. So if we started here and then now it started going down with us from here. Sorry, guys. So now it started going down from there up to there. It would have possible given you the same level that you would have bought at, if I'm just looking at that correctly. Yeah, it would have given you those same levels that you'd have bought at. So it happens. So those are some of the things. Okay, so the other tool that I wanted us to look at is called the, when you're taking your profit. So it's not the tool to measure the uptrend or the structure of the market or whatsoever. It's the tool to just give you an idea of saying, if I'm to take my profit, where am I supposed to take my profit? Sorry, to put my stop loss, where am I supposed to put my stop loss? They say in this particular instance, the Bitcoin broke there, like we spoke about that other day, and then it's just here now. I don't think this is ideal for someone to buy, because the market, you can see that it has already broke the resistance. So what could be the next resistance? Let's see, this is our resistance here at 40, 43 or 44. Am I right? Yeah, 44. If it breaks this resistance, so we're gonna see when this candle closes, because it's a daily candle. If it closes above our 40, 44, 43, thereabout, that means we are looking at Bitcoin going to our next stop might be 48, right? Yeah, it can go to 48, but it might go back before it gets to 48. So these are some of the things that you need to pay attention to. We're here at 48. Let me change the color maybe to black, right? So we're saying that if this candle broke here above, if it closes above this resistance, then what is the next area that we're looking at? We're looking at the area of 48, because this is where it kind of printed the higher highs there, which is the 48 to about 50, 51 thereabout. This is where we probably looking at, if maybe you want to be kind of realistical. But remember, if you look at this candle, this is one candle that has been done in a day. In a day, there are chances that it might. So what you need to do, you need to wait for it to confirm, to give you that confirmation before you jump into it. If you still want to see that, okay, if it breaks here above 40, 43, 44, then we are looking at about maybe 48 to 50 thereabout. Then you are deciding, if you are that person who's swing trading or actively trading, then you can then decide to say, I'm coming into that trade. But also when you're going into that trade, you just know that you're not gonna do much. You're just going in for like 13% of the trade. So it's up to you. Do you want to do that or you don't want to? So let's just decide now to say, if we're looking at to say we want to buy this particular Bitcoin, if it breaks the resistance of 43, 44. Now we want to put our stop loss to say, what is going to happen, or how are we going to decide to say that if in case it comes against us? Normally some people, they will tell you, oh, it's something that I've also done, guys. You know, when you are learning these things, you try this and try that. So they will tell you to say, okay, come and put your stop loss on the lower wick. So in the lower wick, that means it's going to be this one here. That means I'll have to put my stop loss at 41. The lower wick of the red candle, because this is where the sellers are going down. I don't want to say we put it here, because if we put it here, this can be too far-fetched. So the ideal of putting the stop loss is to protect yourself from losing your profits in case the trade goes against you. You are anticipating, or you've analyzed that it's an uptrend, the market is going to go up. Now, you want to have a room of saying, should it turn? What am I supposed to do? So it's either you work with that week, so meaning that, well, those 34 can be too low. Maybe let's work with 36, because also you don't want to be too low. Imagine if you had bought Bitcoin at 44 and it goes all the way down to with you until 34. That means you have lost 10K of that. That's a lot. But if you had maybe anticipated that you're buying at 44, and then that the next lower week here that we have is this one, right? It's this one. So it's this 36. Well, let's see how many percentage that you would have lost. Because also when you are doing that, you are looking at to say, what is your winning risk or a risk reward ratio? I don't know is that thing. Let me see if I can get it. Okay, so we are longing here. This is a long position, right? So you are buying here. You want to come up to there. This is you there. So you come here at that 44. You are looking at your risk reward ratio is 1. 1. So meaning that you're going to make about 16%. But should you lose now, your stop loss should be there, if we can look at it that way. So this is what you can just calculate to say, okay, my stop loss should be here, basically. Then this is going to give you that to say, are you willing to say you are going to lose more than what you're going to win if you're looking at that particular ratio? So you then decide as a trader to say, all right, I need to be realistic, because ideally is to have a structure of saying, what are my wins, what are my losses at this particular time if I'm going into that particular trade. All right, so you can have your stop loss here. Ideally, you can just put your stop loss at 36 or thereabout, or 37. If you're comfortable with saying, because here the winning ratio is smaller than the losing ratio, because what you need to calculate, or what you need to have a look at, is to say, my winning ratio should be more than my losing ratio. You don't want to take a risk of more of losing, unless if you're really seeing that, okay, maybe if it can go to here, then that means your winning ratio can be higher than your losing risk. Then you are able to put your profit, and then you decide to say, I am putting my stop loss there. And then you can put your stop loss there on the Binance account, or any other centralized exchanges that people are using. You are able to do that one. If you were to look at the futures allows you to put your take profit, your stop loss at the same time. Let's just try and work around with this indicator if we can. It's called the average true. Okay, average true range. So this indicator, guys, it doesn't give you the, like, you know, how we use our what is it called? Our moving averages, our RSI, our support, our resistance, and the trend lines, and all those things. This one, it just goes with the volatility of the market. If the market is too volatile, then it's gonna go up. If the market is low, and now also the volatility of the market, we're talking about, if you're looking at the range of the candles, to say, are they really big or what? Let's just maybe try and look at it from this angle, right? Let's see what's gonna happen there. Okay, so if we look at it here, it just went down based on the case. You see the candles have been going down, so it just dropped it down there. It means that the actually from here, remember, it has been trying to go up. The buyers have been pushing it, and immediately we've got these big 2 candles that push the market down. Automatically, the ATR, this is the average true ratio that we're looking at. So it just shows that we are sloping down. It goes with the volatility of the market. I don't know if you understand the volatility, the amount of the movement in the market. Because if these are the big candles, it shows that the big candles, whether on an uptrend, it means the market is going up, it's bullish. The big candles on a downtrend, it means that the market is going down. And then if we've got the sideways, let's just look at the sideways. Look at here, the bodies of the candles. This has been sideways for a couple of days. So the body of the candles are very small, and you can see that we really didn't have much of the movement on our ATR ratio. So how this ATR ratio, basically it says that you just put one ATR below the structure or the demand area. So let's say in this case, maybe you are wanting to go up, you want to buy, or long, you are buying. So when you are buying, meaning that you are looking at to say, if the market comes, then you're buying at this candle. Guys, tell me if we are going together. This thing can be so. Let's say you decide to say you want to buy when this candle closes, and you are looking at to say, if the market comes against you, you are looking at the market to say, let's have a horizontal here. So we spoke about the 36. So the demand or the area of value, which means our support is at, so you look at the wick of the candle. Fair enough, the wick of this candle is very small, but there is a wick there. So we're saying that our area of value here, it's about 36 from this particular area. So what we then do here is to say, we look at our ATR. So what the ATR does, it just gives you that, to say the volatility of the market. So then what you then do, you look at the number of the ATR, maybe from here, you can just look at it from here. All right, this is the ATR number here. I'm sure you can see it here. It says at this particular time, this is 27. This is what? 2,172.46. That's the value of the ATR. Then what you need to do, you just need to subtract from your demand area, from your area of demand. Where is our area of demand in this particular case? We say it is, well, that makes sense too, guys. We say we're looking at 36, right? Let's put this 36 on a red color. We're looking at 36 to be our area of, meaning that the lowest wick of this particular red candle here is 36.2. So what we then do, we're just gonna take our ATR, we read our ATR as is, and we subtract. We want to identify or want to get to say, where do we put our stop loss? This is what it works on. It's not going to tell you that the market is going up or down. You would have already analyzed to say the market is going up or the market is going down. So let's look at 44. No, sorry, at 36. So we're looking at 36. This is where we said if the market gets to come down, it should maybe come hit here. This is our area of demand or our support. We are saying if it doesn't break there, that means chances are high that it's gonna bounce back and come back to these levels. What are these levels? We take it our lowest wick, which is 397.85, and then we subtract the value of the ATR, which is 2,172.46, right? So meaning that our stop loss, guys, this thing is so nice. So meaning that, did you guys subtract? What did you get? Anyone? Oh, I didn't think that. What did you get?
34,227.39.
So basically meaning that our stop loss now is gonna be 34,000. We're taking another horizontal. So our stop loss meaning that is gonna be 34,200. So we are putting it, yeah, somewhere there. And the reason why, so you don't want to really put it too tight, because what happens, it might happen that the market can come and touch here. Let me just change this price, this color, maybe to blue. So this is where your stop loss is going to be based on you working with the ATR. Guys, it's so simple. You just take your resistance or your buy candle where you're buying, because in this particular instance, you are buying. The market is going up. So the only 10 can be to say the market can reverse down to you. If it reverses down, where can it reverse to? You're looking in your left-hand side. So this is your lower wick, which is the sellers now pushing the price down. They're defending the price down. Then you're seeing that, okay, this is 36 point that one. So you take that particular, you put your horizontal line there, or your support or whatever. And then now you go read your ATR as is. So when you're setting up your ATR, I think it's just defaulted on, okay, hold on, sorry. With our ATR, it's here. So it's just defaulted on 14, guys. I simply use it at 14. Let's see if we change it maybe to 20. What is it going to give us? Well, these things, you just play around them to just suit your needs or your wants, whatsoever. Yeah, well, there's quite some bit of a difference there. So either way, but anyway, you can just put it at that particular default. And then we are saying that should this market come and break our support, I don't want it to go further down until it reaches what? It goes all the way down, maybe to lesser than 34,000, which means your next support might be 29,000. So you rather say, can I be stopped out at 34,000? Can I sell? You are selling. Basically, when you're putting your stop loss, you are putting it at 34,000, so that when you are losing, you're not going to lose a lot of money. You're just going to lose a little bit of that percentage. So this is how you calculate it. Then what you're going to do now, when you go to your Binance, you come and put your stop loss. So you put your stop limit. When you want to put your stop loss, you put your stop limit. Anyway, this is supposed to be BTC. BTC, USDT piece. It is here. Okay. And I promise you, this could work out very well for someone who has bought here. That's why I'm saying at this particular time, already there's a move in the market. Don't FOMO into it, guys. We are not going to chase the green candles. Don't find yourself buying a green candle. You are making a mistake. At whatever cost, even if people now are saying that, oh my goodness, this is going to go do this. But if you look at it already, it has moved from this particular, it came from 37. Remember, it came from 37. It is moved to about 44. And if you want to buy at 44, there are very big chances that the market can give a leg down with you. But if you have missed it like that, you just wait for it to say, okay, if it comes down, it might come to 40, 41. If maybe it holds there, then I can buy it at 41. Right. So these are some of the things that, you just need to kind of instill them and practice them every day so that you don't make those mistakes. So if you have missed it buying at 437, because this was last week, it went up to about 36,000. You should have bought at 36, maybe your highest that you should have paid maybe 37. At this particular time, the market is gone already. This market, this particular leg, it's already up for you to say, even if we are anticipating to say, if it breaks through 44, then we are looking at about 48, 50K. But you don't want to find yourself buying here for that 50K. The person that would have made profit is someone who has bought here, right? It's someone who has bought here, guys, at 37. So if you see that, okay, it's gone, let's not FOMO into it. And here at the sideways again, you see, it just gave that time to say, can I consolidate? It wasn't decided. That's why during the weekend, people were saying Bitcoin should hold the 37 or the 38. Otherwise, if it doesn't, or sorry, what was that? It was 40. Let's see, what was that? Not the trend line, actually the horizontal, when it was here. Yeah, so a lot of people are trying to say, can Bitcoin hold 40, 41? And then when it broke the 40, 41, then we say, okay, our next stop is 44. It can happen that the next stop is 48, 50, but I think if you're coming into this particular trade, your risk is more than your reward than someone who said, I'm coming here. Okay, so now that we've identified our take profit, we said our stop loss. So we're selling here. We said our stop loss is gonna be 34. What did we say? 34.225. Probably 0.34 again. And then you decide with the position that you have with Bitcoin. If it gets there, am I selling all my position? If I put 10,000 Rand, remember Bitcoin, you can buy a fraction. Am I putting my 50% position, or I'm selling if the market is reversing? Because the chances are, if it breaks that 34 support, the next leg will be still going down. So now if it stops you out, it's going to give you another lower price for you to come in. So that's the whole point of a stop loss. As long as you make sure that your stop loss is not too tight, because if it's too tight, it might happen that it reaches here, it stops you out, but it reverses back again. But at this particular time, if it gets here, it's a confirmation that it can give us another leg down, meaning that it can give you another lower price of about 29. So if you are stopped at 34,000, you can still come back to the market at 34,000, at 29,000, as we are looking at this particular, yeah. So you are saying, yeah, I'm going to come. If I'm stopped at 34, you have saved your money. Then for you to just hold and pray. Guys, let's not work with prayers, please. Nankatel. Let's put the prayers where prayers are supposed to be. Where they are not supposed to be, let's just use the logic of it and say, okay, I'm stopped at 34. I can still buy back at 29,000. That's all it says. That's all it means, guys, about buying, taking profit. So I hope you've managed to set up your ATR. You can put it at 14 or you can put it at 20. Either way, it's just a question of just time or length of it, but it really gives you almost the same accurate results that you are looking at. All right, I think I'm gonna take questions or hand over, because yeah, it has been so much of talking and talking. What else didn't I cover? What else did I say I want to cover that I didn't cover, guys? Where's everyone today?
They are here listening.
Yes, Posh, you seem to be moving around. Wenzani? Hlala phansi ulalele ama-numbers.
Can I do this with the altcoin trader? Because Binance yangikhathaza.
What's happening with your Binance? I doubt with us.
It's moving sideways.
Awukwazanga ukuyenza what's it called? Your proof of your KYC.
I tried to download it, but it's not downloading. I don't know what's going on.
Okay, just go on. You can just open it through the browser, nah? You don't have to probably download it. You can just open it through the browser. Let me see what features do Altcoin Trader give us. All right. What indicators are here? Indicators. Maybe. I don't know. Okay, this is the one that we spoke about. Okay, so guys, the candlestick patterns, you can just put the ones that you understand, but these are the common fair ones, especially at a beginning stage. Yeah, it does allow you to do that, hey? There it is, yeah. It does allow you to do that, Mukumalo.
Okay, thanks.
I think it does. There it is. Yeah, I've never analyzed on CoinMarketCap or on Altcoin Trader. Well, I think the experience is just a little bit different, but yeah, you can just start there in practice. But make sure that you get your thing.
The Binance.
Yeah, make sure that you get it done.
Okay.
Let's see if I'm looking at the settings here. It doesn't give me what I want. So most of the things, I'm not sure how we're going to manage that. I'm just gonna play around with it tomorrow, but yeah, it does give you some bit of that. Especially if you, so kumele who advanced, who advanced is the one that seems to be having some bit of stuff here, because you still have your time frame, which is very important. Your candles, you can still do your settings, and then your indicators, you can still do them. So yeah, that's about you can.
Okay, thank you.
Pleasure. Let's see. So guys, you can customize your tools and your trading indicators, like your moving average, how you want to put them there. You can still play around with them and customize it. The only thing you can get this thing is just to do it wrong. You end up getting lost to say, where did I start? Where am I going? You just do it again, you do it again, until it makes sense. And the only thing you can really be able to do it is to start doing it, so to say. As much as you'd be like, now I was looking at these candles. So the first thing to start, guys, just understand your candles, and then your candle patterns, and then our indicators. So if you start there, then you'll be able, even if when you're looking at the charts, you can see, okay, it's a green candle. What does it mean, right? Yeah, like I said, it's just the experience, but it's more or less the same. Yeah, so I just want to see if I can put this other indicator. You don't even need to have a lot of indicators, guys. Remember our RSI, if it's over 70, so this is our RSI, so it's already over 70, it means that it's overbought. So if it's overbought, it means that it can come down. If it's oversold, that is less than 30, it can go up. So these are some of the things that you just, have a hint on. Like I said, you don't want to look at one indicator and just and take a decision or put your trade based on one indicator. You can just try and play around with 1 or 2 or 3 indicators around, or your pattern, your candlestick patterns, those morning stars, your hammer, your engulfing candles, and all those things, and see what, okay, if it's like this. And then you look at your support resistance, guys. That's where you get your demand and supply. Demand and supply, very, very important. Because if it breaks the resistance, it means that, okay, there's a lot of demand. It can go further up. And then if it breaks the support, it means that the sellers are pushing the price down. It can go further down. So one or the other. And as we progress, we're going to learn to say, how do we then trade the breakout, or how do we swing? The other thing that I wanted just to give you quickly, for those that wants to be swing traders, like Mamda, I know she's got time in her hands. So if you're a swing trader, you kind of look at these things. Let's see if we can get a swing here. You are really trying to identify the lines. Okay, there's no swing here because this is more of, I don't know this one. This is more of a consolidation for me right here, right? But now this consolidation, it did then give us the, oops, I want to break this line down. Okay, so we are seeing that this is a consolidation line, right? This is all consolidating. Okay, maybe it consolidated there. My line is cute. I'm so sorry. I'm not an artist. But here it was all consolidation, if you can have a look at it here. So if you want to identify a swing, it then means that you are going to say, this is an uptrend. Okay, this one is not even clear, okay? If it's not clear, then don't do anything, right, guys? All right, maybe here, this is a swing. So if you want to swing, you identify the demand. So if it touched, obviously you'd have looked back, maybe it touched 1, 2, this is your third confirmation, then you are trading that swing, right? And then you see which, okay, if it has gone up there, the chances are high again that it's gonna come further down again here. So it's up to you to say you're only taking the upswings or the downswings. But if you just have to look at this thing, it goes up and down. So those that are trading swings, it's a swing, you take profit. It's a swing, you're shorting, but this is more of futures. The futures are the one that allows you to make profit even when the price is going down and the price is going up. We agree that we're not looking at them, but if you guys want the futures, I'm here. We can still look at those futures. See, it's another swing there. And then if we come here, it's another swing again. Okay. So you see, you'd have done this if you want. You'd have traded this, but now it really needs you to make sure that you come at the bottom. Make no mistake. Or if you're selling, if you're taking the short one, you come at the top, you come at the bottom, you come at the top. So it's those confirmations 1, 2, then 3, you're going up, you're going into the markets. Such things, guys. I'm done. Mr. Malava. Is he here? Is there anyone with a question, guys? Okay, not this one. Is there anyone with a question?
Yes, yeah, good evening.
Yes, Baba Mia.
Yeah, Binance says